Hello, traders, and welcome to your weekly briefing on the EURUSD. The currency pair is at a fascinating crossroads, leaving many to ask, is the euro getting ready for its next leg up, or is it about to roll over? Let's dive into the analysis. Right now, the market sentiment is a true battleground. There's a clear split between bullish and bearish outlooks, creating a tense atmosphere. On one side, the bulls are pointing to a multi-week rising trendline that has consistently provided support. Their strategy is to buy the dips, anticipating a bounce from these established support levels. They see the current pullback as a healthy correction before price potentially targets the liquidity resting above the 1.18 level. On the other side, the bears are building a strong case. They highlight fundamental pressures, including U.S. tariff threats and strong economic data that favors a stronger dollar. From a technical perspective, they see bearish patterns forming, like broken channels and structures that suggest downward momentum. For them, any rally is an opportunity to sell. Caught in the middle are the neutral observers, who are waiting on the sidelines. They see a market stuck in a range and point to a week packed with high-impact economic news that could bring significant volatility and break the current stalemate. So, where are the key price points to watch? The major battle line for sellers is shaping up in the resistance zone around the 1.17 level. A failure to break above this area could embolden sellers and confirm a short-term top. If the price does manage to push higher, the next significant ceiling is located up near 1.18. For buyers, immediate support is being tested right now near that crucial rising trend line, also around the 1.17 mark. A more substantial zone of demand, however, sits lower, near the 1.16 level. A decisive break below this area would be a major victory for the bears and could trigger a much deeper slide. So, to summarize the key takeaways, the EURUSD is caught in a tug-of-war between a long-term uptrend and growing short-term bearish pressure. The bearish case is backed by strong fundamental factors and technical signals pointing to a potential drop. They are watching for a break of support around 1.16. The bullish case is holding on to the long-term trendline support, viewing the current price action as a chance to buy at a discount. The coming week will be pivotal. With a heavy economic calendar, we can expect volatility. The price action around the 1.17 resistance and the 1.16 support will be critical. Watch these levels closely, as they will likely define the direction for the days ahead. Trade safe.